Hey everybody, JC Peretz here, founder of All Star Charts. Welcome to our options trade of the week. I am joined as always by my esteemed colleague, Mr. Sean McLaughlin. What's up, Shawnee?
What's happening, buddy?
Listen, I loved your enthusiasm this morning. You coming in hot. JC, what is the staple that we can sell a strangle on? Just like that. And I was like, oh, excuse me.
Well,
And
look, you know that I track the ETFs of all the sector ETFs, and at the top of my list, volatility wise, is the consumer staples ETF. So I'm like, there's got to be something in that sector that we could sell some premium in.
And honestly, I didn't see it coming, right? I didn't see it coming at all. Here's the low volatility relative to the S&P 500 hitting new all-time lows, and more specifically, consumer staples hitting new 52-week lows. Again, on a relative basis, yet I didn't think that the staples would be paying enough to make it worth us selling those premium. I didn't quite realize that it translated on an absolute basis in the derivatives. And oddly enough, funny enough, Straza was not part of that conversation, comes in later. And I said, yo, we're selling a strangle in consumer staples. And he's like, for what? He thought the same thing as me. We're not getting paid for it. Why bother? And then here comes in Sean with the data. We're data driven, and both of us were convinced that, yes, in fact, we should be selling a strangle in some consumer staple. We were looking at Costco, but they're reporting, right? So that kind of just
they got earnings in 2 weeks, so that was a no-go.
Yep. So we were starting to think, and who said Philip Morris? Was it the Fonz? I think it was the Fonz.
It might have been the Fonz, the new MVP of All Star Charts.
Shout out to Alfonso.
Actually, he's not the new MVP. We've always known he's the MVP.
But... Dude, Fonzo killing it. We were looking essentially for a messy stock. Not hard to find in this particular environment where the S&P 500 is stuck in this range, right? Kind of just really, really messy. Volatility is elevated. You got the VIX now above 15 today. Philip Morris, a hot mess. And we're getting paid for it. So, Sean, why don't you walk us through, number one, the thought process of, I suppose, why you want to sell, kind of maybe just reiterate to the audience that might be new, why we're not just buying a call or buying a put, why we're taking advantage of a range-bound market and elevated premiums, and why Philip Morris specifically. What's the thought process here?
Well, first of all, that's a cute chart you got up there, but I trade on a 6-week time frame, so I don't need to be looking at a 80-year chart there, whatever that was.
I want to give everybody some perspective. Come on. Listen, it's not about YOLOing what's happening today. It's about understanding where today's market is, this range-bound market in Philip Morris, within the context of where it's been, quite frankly, in a range-bound market for a decade. So,
range within a range.
Fits the bill.
A range within a range, that's music to my ears when I'm looking to sell premium. Zooming in here, this is the 1-year chart of Philip Morris. And if you look at that chart, I mean, it's done nothing but just tighten and tighten. The range has gotten a little bit more compressed as we've gone along. And the nice thing, at least for the timing of our trade right now, is that the sell-off that Philip Morris has had over the last 3-4 trading days has actually helped juice the premiums a little bit. We've got earnings on the horizon, but we selected an expiration that just dodges that, so we don't have to worry about expiration or earnings. But with earnings coming up soon and the sell-off that we've seen in the stock over the last 4 days, that's really helped juice the premiums. And we've got some pretty nice risk management levels that I like, that I was able to lean against for selling strikes. We got them highlighted there. The 98th strike above, that's where we sold calls. And that's just above where, last week it traded intraday high. It was 97 and change at some point intraday last week. But the sell-off we've seen the last few days makes me feel like that recent high is going to stick for a little while. Meanwhile, that level of 90, we haven't seen a closing, or the closing price of 90 has been the floor on 2 separate occasions this year. Feels pretty significant to me. I'm not saying Philip Morris can't break below 90 or above 98, but I don't think it's going to do it over the next 4 weeks, and that's the bet we're making.
Yeah, and I hadn't quite thought, because I didn't think that the ranges were well defined enough, and maybe not maybe not close enough to get paid what I thought we would get paid. And when you outline those particular levels, Mr. Technician over here, Shawnee baby, calling out the support and resistance. Honestly, I couldn't argue with you. I also really like that flat 200-day moving average. The sheer definition of a range bound market is when you have, price relatively in between overhead supply and downside support, like we've seen here near a flat 200-day moving average. It's like check, check, check. The question is, are we getting paid to sell the strangle, right? Just because the chart's a mess doesn't mean we're going to get paid for it. In this particular market environment, we are. So I really like how you outlined that, Shawnee. So here we're looking at the Philip Morris. So again, this is Philip Morris, not Altria Group. This is Philip Morris International. There's a difference. I'm not going to pretend to know the difference, but there is definitely a difference. The market caps are very different. The dividends are very different. I think they were both part of the same company at one point. I don't know. Not really our problem for this particular trade, but if you're interested, go knock yourself out. I'm sure Straza knows. I'm sure he's like, well, yeah.
I think it was some kind of, political spinoff. Like, hey, we're trying to separate the cigarette business from the Frito-Lay's business and all that other nonsense.
Frito-Lay's?
Don't they own Frito-Lay's and a bunch of chips and things like that?
I think Pepsi owns them. What are you talking
about?
Okay. It's a tobacco company, dude. What are you talking about?
No, but I know that. I know they're a tobacco company, but they have other lines of business as well.
I'm sure, but I don't think it was potato chips. All right. Listen, the funniest part is listening to us two knuckleheads talking about the fundamental analysis of Philip Morris. Like, it matters for this particular trade. It's so funny. At least it cracks me up. It's the simple things, Shawnee. Why don't we talk about this strangle here? We're just betting that it continues to churn sideways over the next several weeks. That's the probabilities of success are on our side. We're not going to make a fortune out of it. It's going to be a high probability, low income bet that we can consistently make over time when the opportunities present themselves, and it really starts to add up.
Yep. I mean, we could get real nerdy here if you want and talk about how there's a approximately 70% probability that Philip Morris will close between our strikes, between the 90 put and the 98 call on expiration day, which in this case, by the way, I should point out, you see weekly in the headline up there. I did the weekly options. Normally, I will stick with regular monthly expiration options, but in this case, Philip Morris, for whatever reason, decided they want to announce earnings the day before options expiration. They're announcing earnings on the 19th. October expiration is the 20th. That just looked like a lot of trouble I don't want to deal with. So we chose the weekly options that expire a week earlier. Plenty of liquidity there, plenty of volume, no problem. So we chose the weekly. So I want to make sure that people are clear on that, and for very good reason. Now, there's a 70% chance that PM.
This is according to who? DraftKings?
Yes, according to DraftKings and the Vegas Sportsbook, they've got this down as a 70% chance that PM will close between these two strikes. Now,
where's that number calculated from? Seriously.
It's a lot of nerdy options math. It might even be over my head to explain it to you in a way that a third grader would understand it.
But is this the broker providing the number?
Yes, my broker.
Oh, okay. I'm like, what kind of math are you doing back there, dude?
Yeah, I'm not doing the math. No. I got machines doing the math for me. I trust the math that the machines
are doing. Yes. Trust the process, right?
But look, we might have a 70% chance of this thing closing between 90 and 98 bucks, but we don't even care about that because we have no design on holding this all the way to October 13th. Our plan is to get out long before that. We collected $1.40 for the trade. If you were to put this trade on right now, you could actually get a little bit more because volatility's juiced up a little bit as the market sold off today. We sold it for $1.40. We're looking to buy it back at 70 cents. If we can do that, we will do so, book the profit and move on. And that's always my best practice when trading short, naked short strangles. You don't want to get greedy when you're holding naked risk. It's not a long-term program for success in my book.
Tell them about the resting order, Shawnee.
It's a good till cancel order, GTC, good till cancel. All that means is I put the order in today and it's going to stay working. I don't need to do anything. And when the value of that spread gets down to 70 cents, my limit order will get hit. Somebody will hit me. I'll get taken out of my profit, and I don't even have to think about it. It could happen while while we're hanging out at Huntington Beach next week. Sipping cocktails. It could happen then. Who knows?
GTC. If I ever buy a boat, I don't know that I ever will, but if I ever do, I think I'm going to name her GTC. Right? That's good.
I like it. I like it.
Right? I like it. I like. When I used to be a permabear, I used to say that I was going to name my boat just Short It. Right? But we've been in bull markets for such a long time. That doesn't make any sense anymore, right?
I think if I were to come up with a boat name, it would have Delta in it in some way. I'm not sure what, but I would throw Delta, something options nerdy in there.
Yeah, I could see that. Anything else would be uncivilized. All right, everybody. So let's reiterate this trade. This is in Philip Morris, not to be confused with Altria, MO. This is specifically Philip Morris International, PM. And we are selling a short strangle here. 9098s. These are the October weeklies. So these are October 13th, not the traditional classic third week of expiration October. This is specifically October the 13th. We are selling naked short on equal amounts of the 90 puts and the 98 calls for $1.40. And if we could buy these back, when we can buy these back for 70 cents, we shall. We'll book the profit and move on. Now, from a risk management standpoint, if at any point Philip Morris International closes above the call strike of 98 or below the pull strike of 90, the put strike, we will unwind the trade immediately and book our small loss or potentially even a small gain, depending on what's going on at the time. And we will move on to the next trade. How was that, Sean?
Well done. I feel like maybe you watched my options trading course a while back.
Something like that. I think it's more like I'm here with you every day talking trades. I've come to understand the math better and better and better over the years. And I think it takes time. If you're new to options, and you're not running these things in your head, start doing it on paper and you'll quickly. It's really not complicated option strategies. We are very keep it simple, stupid around here. And this is that. Volatility is slightly elevated. They are particularly so in consumer staples. We can get paid to play, so let's do it. Shawnee, I look forward to being live with you in California. If you are out there listening and you're going to be at Future Proof in Huntington Beach, California, this week of, what does it start? November the 10th? Is that right? November 10th, 11th, 12th?
No, September 10th.
Oh, yeah. Sorry. September the 10th, 11th, and 12th. That's next week. Huntington Beach, California, Future Proof. Should be a good time. Come say hi. You'll find Sean and I either on a hike or by the bar. Probably both.
Or if you're so lucky, you might find us at SoFi Stadium on Sunday. Woo!
Or at a Vietnamese joint with VC Lund. I spoke to him today. He's taking. Oh, you were there. Yeah, he's taking us. You want to do Korean barbecue or you want to do Vietnamese?
I would prefer Vietnamese, but either one will be great. I don't care.
That's what I'm thinking. Either one is good. All right, guys. I'll see you in California. Otherwise, I'll see you here next week. Adios.
See ya.